Hello everyone, it's Wednesday, August 13. Today we're analysing the euro and British pound charts to gauge potential market trajectories. Yesterday the euro came under early pressure following disappointing German economic sentiment data. The ZEW index tumbled from 52.7 to 34.7 in August, while the current conditions index sank further into negative territory at minus 68.6. Similar figures from the Eurozone added to the strain, with the sentiment index plunging from 36.1 to 25.1, well below forecast. Later in the session, attention shifted to US consumer price data. Headline inflation rose by 0.2% in July, in line with expectations, bringing the annual rate to 2.7% versus the forecast 2.8%. Core inflation posted a 0.3% monthly increase and a 3.1% annual gain. These figures suggest that the Federal Reserve has fewer reasons to keep interest rates elevated. Importantly, no inflation spike followed by Donald Trump's imposition of trade tariffs on multiple countries, while signs of cooling in the US labor market highlight mounting pressure from high interest rates. Together, these factors increase the likelihood of rate cut as early as September. Heightened expectations of the Fed's potential policy easing triggered dollar selling, giving both the euro and the British pound room to advance. Now let's turn to today's macroeconomic calendar, which features consumer price data from Germany. Inflation is expected to match forecast, rising by 0.3% month-on-month and 2% year-on-year. The harmonized CPI is projected at 0.4% on the monthly basis and 1.8% annually. If the data meets expectations, it is unlikely to spark a strong market reaction, allowing the euro to hold on to upward momentum it gained after yesterday's US inflation report. Later in the session, the focus of market participants will be on speeches by Fed officials Thomas Barkin, Austin Goolsbee, and Raphael Postic. Traders will be watching for their take on the latest US inflation figures and the recent suffering in labor market data. If they strike a more dovish tone, it could add pressure on the US dollar and give risk assets additional support. Turning to technical analysis, the EUR-USD chart shows that a decline followed by a false breakout at 1.1666 would generate a strong buy signal, pushing the euro toward 1.1697. If the price breaks through this level and consolidates above it, the euro could climb to 1.1722, potentially reaching 1744. At this level, I would recommend going short on the rebound, targeting a 25 pips correction. Short entries at 1.1697, a strong resistance level, and 1722 should be considered on a false breakout, with the downside target set at 1666. A confirmed break and hold below 1666 could send the euro down to 1635 and possibly to 1.1601. At this level, it would be wise to go long on rebound in anticipation of a 30-35 pip move. Long positions at 1635 and 1666 would be appropriate only in case of a false breakout. As for the British pound, the bullish trend is still intact, with no signs of momentum fading. A break and consolidation above 1.3516 would trigger a buy signal, paving the way for sterling to climb to 1.3553, potentially at 35.80. At this level, I would recommend locking in profits and going short on a rebound, counting on an intraday correction of 20-25 pips. Short positions at 1.3518 and 35.53 should only be considered after a false breakout. Given that today's macroeconomic calendar is light regarding news releases from the UK, it would be prudent to go long around 34.79 and 34.47 on a false breakout. Another attractive buy opportunity would be a rebound from 34.03, targeting a 35.40 pip move. Good luck.